how can I blame you? I mean, Italian taxes look like, sound like, complicated and harsh from the very beginning. And ever thinking of starting to learn how those rules work is very boring and not attracting. If I had the chance to choose something else, I would probably go for Netflix and Disney Plus with my spare time rather than wasting it on the internet looking for a video like this one. Expats approaching taxes, Italian taxes for the very first time, in my humble opinion, should start from the very basic question: how they become a tax resident? And if they don't, if there is anything under the Italian fiscal system that must be taken care of, in one word, liabilities. Even you're a foreign tax resident. If you buy a property in Italy as pure investment decision without moving, okay, you don't have to report your worldwide income and assets. However, they want you to recap your income generated in Italy and pay your property tax. Likewise, if you move to Italy as a sole owner of a business abroad and you're the main and only shareholder, more likely you have to pay your taxes on the profits coming from the other country, according to the Permanent Establishment application of Article 4 of the International Taxation Agreement. Once that you understand, and by that I mean not guessing or learning from others, okay, but having a crystal clear picture of where you are tax-wise, it's time for you to pick up your calendar and use the red pen. In one word, deadlines. There are deadlines for everything: income taxes, wealth taxes, rental income taxes, passive income taxes, property taxes, pension contributions due on the Italian pension scheme. Missing one single appointment can cost you way more than just, a few fines and penalties for the delay. Potentially not showing up in time could kick you out of any tax incentive, such as beneficio impatriati or 7% from pensioners in the South. Let's say now, finally, you got all this set up, ready to go, and for good reason, you like to budget your Italian taxes. You want to know how and what you're going to pay your taxes. It's crucial to define the tax basis, since very often what's been taxable in one country must be adjusted in Italy for the better or for the worse. At the same time, some salaries could be considered tax-free, as much as foreign public pensions could benefit from the same treatment. So before turning into a green, angry, pissed off Hulk, I suggest checking every single asset and source of income of your list and see how it's going to be treated in Italy. And when you have completed the list, I hope it is as short as possible for your own benefit, and if you know what I mean, you must apply for the so-called dual taxation credit. All the people out there use the same line: you'll never pay twice as much. Italy will credit all the taxes paid abroad. Almost. The tax agreement between the country of origin, the country where the income is coming from, and the country where the assets is, and Italy will dictate the amount of the percentage allowed. So please do not assume that it must be 100% always, no matter what. Sometimes it can be a total credit, sometimes they put a cap or a maximum you can claim back. And most important, any credit resulting must be used for a similar obligation. Just to name one of the most common mistakes we see over and over, people offset property tax against income tax, or flip side. You simply cannot. Once you've taken notes on your Italian plan, you have a draft of the Italian tax bill, the Italian liability. You know exactly when and how to pay. Remember, ever learning how to pay taxes is something you have to add on your tax list. You can explore any special tax regime offered by the Italian government. The regime impatriati, as known as the 50% discount for high-skilled employees, the regime forfettario for those who start a business in Italy making up to 85,000, the 7% for people retiring from work, and the high net worth individuals flat tax are the ones actually on the menu. It really depends on your fiscal case, goals, financial background, and commitment with Italy. Generally speaking, they can be a no-brainer for a lot of you looking for a tax break, since they literally cut a lot of taxes if you fit the perfect requirements. And even if all of those are time related, time limited, 5 to 15 years at most. When people reach out to Studio Rigo, to us, I like to play jokes when things get too serious. Very often, people retire from work look for the 5% tax regime. Business owners ask for the 7% requirements, and billionaires want to deep dive about the regime impatriati. So, as much as I love to interact with curious people, please think of tax strategies like choosing a pair of shoes to run a marathon. Would you buy some just because they look cool or because someone else found them comfortable?